Welcome. Thank you for joining us to this Markets.com company profile of Berkshire Hathaway Incorporated. I'm your host, Luisana Swegart. Let's get started with some background information. The company's headquarters are located in Omaha, Nebraska. Founded by Oliver Chase in 1839, Berkshire has approximately 30,000 employees worldwide and a market cap of over $177 billion. CEO Warren Buffett is the man behind this holding company, which owns many subsidiaries, mostly based in the United States. Now, while it does have many different subsidiaries, they are divided into four main segments, those being insurance, regulated utility business, manufacturing service, and retail operations and finance products. The company also invests in many large-cap publicly traded companies. Let's discuss Berkshire in the market, where stocks are traded on two exchanges, mainly on the NYSE, but also on the Frankfurt Exchange. It does not trade on any major index. Taking a look at the reported financials for 2007, their reported revenues came in just over $118 billion, and net earnings just over $13 billion. Berkshire's balance sheet indicated total assets of approximately $273 billion, while liabilities were at $152 billion, with equities making up the difference at $120 billion. Now for some more numbers, the debt-to-equity ratio of the firm was sitting at 0.3, and the company had 1.5 million shares outstanding at the end of 2007. On the last day of 2007, the market cap was a little over $219 billion, but on August 13th of 2008 was just over $177 billion. It is also important to note that the company pays no dividends. If we look at the operations of Berkshire, we will see that they hold a diversified portfolio of companies. The companies don't have too many synergies, but that is not a concern as they are independently managed. Now, what does matter is the fact that these companies are businesses that don't need much money to grow and provide solid cash flows, and this money is used by Warren Buffett to invest in other companies. Last year, Berkshire finished buying out the Marmon Group, wrapping up the acquisition that had happened slowly over a long period of time. The Marmon Group is similar to Berkshire in that it already was a group of companies that provided solid cash flow to the holding group. Let's talk about Berkshire's vision for growth, which is based on the acquisitions and organic growth and individually managed at each company, while the holding group is the one concerned with acquisitions. Berkshire is a company that, thanks to its CEO, has kept a similar strategy for many years, although one does not expect that to change while he is at the helm or even when he leaves. It is a company that is okay with low risk and low growth investments, and in the past has made great investments in awful markets. Still, it has not been affected by the credit crunch and has a cash position that will let it take advantage of the situation. With that, we conclude our Markets.com company profile of Berkshire Hathaway Incorporated. I'm your host, Luisana Swegart. We thank you for joining us. See you soon.